Many people think the goal of real estate investing is simply to own a property. You buy a house, find a tenant, and collect rent. But if you want to scale, you have to think differently. You need to build a business that uses real estate as its infrastructure. To do that, we use a specific tool, the Real Estate Business Framework Blueprint. This gives you a clear map for a scalable operation. Go ahead and pull up a blank document. Write down these 5 core headings: role, customer, property, operations, and capital. Completing this exact framework protects you from the most common trap new investors fall into: buying an expensive physical asset without a defined operating system to support it. Step 1 is clearly defining your role. You have to decide if you are going to be the property owner holding the asset, the operating company running the daily business, or both. This matrix shows trade-offs. The property owner requires higher capital but keeps complexity low. The operating company drops capital needs, but daily complexity spikes. Doing both means absorbing the highest risk and management on both fronts. Step 2 is identifying exactly who your customer is and how they will pay you. Look at these standard residential brick houses. The exact same physical structure can serve entirely different markets depending on who lives inside. You might place one family in there paying traditional monthly rent, or target affordable housing programs like Section 8, where rent is supported by government vouchers. You could even use that same building for adult residential pair or shared co-living. Moving from standard rentals to specialized housing introduces new rules. You'll have to navigate housing authority standards, facility licensing, and specific payer regulations. We define your role and your customer first, because those 2 decisions dictate every legal, financial, and operational choice that follows. Now we move to step 3, setting strict property acquisition criteria that directly serve the customer profile you just identified. The Detroit affordable housing market is an excellent example of using data-driven targets. The BNIC network focuses specifically on this city because the entry points enable strong, repeatable returns. This mock-up of the Redmond's Deal Analyzer shows exactly what they look for. They target an acquisition price between $15,000 and $50,000, aiming to keep the total all-in investment under $60,000 per property. You have to stick to your specific numbers. Buying a property simply because the purchase price is low is a mistake if it doesn't align with your revenue model. Step 4 is designing your back-office operating system. This flowchart splits operations. The left handles physical real estate tasks, deal sourcing and renovation, managed by the BNIC network. The right handles business administration, entity formation, bookkeeping, and financial management, where firms like Help Keep My Money LLC step in. If you ignore this 2-sided infrastructure, you get stuck. Without a functional back office, managing a single property becomes a full-time job, making it impossible to scale into a multi-unit portfolio. Step 5 brings us to the capital strategy, where you calculate the return on investment for one single operating unit. Let's look at the math on a real-world example, a vetted single-family property on Mackay Street in Detroit. This chart breaks down the Mackay Street outlay: a $30,000 acquisition, $7,000 wholesale fee, and $10,700 for renovations. Total investment, $53,700. Once stabilized, it generates $7,400 in annual net operating income, yielding a 14.25% cap rate. Proving these exact unit economics on paper confirms that your business model actually functions before you commit a single dollar of real capital. You've moved past the vague idea of just buying a house. You now have a 5-part, actionable business plan. Your blueprint clearly defines your role in the operation, the exact customer you serve, your property criteria, the back office structure, and your capital requirements. The next step is execution. Use the Redmond's Deal Analyzer link in the description to start running real market data against your new property criteria. Then schedule a clarity call with Help Keep My Money to set up the legal entities and financial systems that will support your growth. Stop focusing on just acquiring a single physical asset. Now it is time to build a real estate business.